Hey there, it's Ginny Field again, and I am very excited that I get to introduce you to Ginni McGee. Ginny is also with Fairway Mortgage, and as you know, I've been doing a series on the myths of reverse mortgages, and Ginny is out of the Atlanta area, and I asked her, she and I discussed and decided that the best topic for her to speak to is what happens when someone passes away that has a reverse, and what are the processes. And it was a great conversation. We spoke about trusts and inheritors and what can happen, and we talked about non-recourse. It's just really an interesting topic because it's another one of those places where there are people out there that believe, well, when I do a reverse mortgage and I die, the bank's going to get my house, which is not true. And so she's just a really special, very, very smart lady. I hope you enjoy hearing from her, what she has to share with you. And as is always the case, there will be contact information for her if you have further questions at the end of the video. I hope you enjoy. Hey, everybody, it's Ginny Field, and I'm excited to continue my series on dispelling myths of the reverse mortgage system. And this time I'm very excited to introduce you to a really special lady that I got to know a bit of time ago named Ginni McGee. She's remarkable. And this topic is going to be about one of those other ones that I personally hear, because if you know me, if you follow me, you know I do a tremendous amount of business with seniors selling their homes. And there are people that I've personally known that could have been saved, if you will, using a reverse mortgage. And for whatever reason, they had one of the myths. So today's version is going to be about what happens when somebody passes away. What happens when the end happens, if you will. But probably because Ginny's Ginny and amazing, it's going to go other places, but just walk with us. We're going to be great. So Ginny, my sweetheart, please introduce yourself.
Thank you for having me, Ginny. I am Ginni McGee. I am a retirement mortgage specialist with Fairway Independent Mortgage. I'm also an SVP over the eastern section of the country. And I have been offering home equity conversion mortgages, otherwise known as reverse mortgages, for the last 20 years. It's the only loan I've ever done.
Wow.
So I tell people I don't know a lot about a lot, but I know a lot about this one little product.
I didn't know that. That was new to me. I love that.
Yep.
So how long have you said 20 years you've been in the reverse industry? How did that happen? I'm just curious.
Well, it's a crazy little story. I actually have a degree in design. So I was a designer for many years, creative actually. And then I was a stay-at-home mom for 10 years. We have 3 sons. And we went on a mission trip to Kenya, East Africa one year.
Wow.
And it was a group of us, and we met a guy there who we became friends with, him and his wife. And he came back, he lives in Philadelphia. He was doing reverse mortgages. And so when we went to visit him, we went to Philadelphia one year for our vacation. He was doing reverse mortgages. And my husband looked at me at the time. I was a stay-at-home mom. He said, "You would be really good at that." Now, the verdict is out whether or not he was trying to get me to go back to work, or he really felt like I'd be good at it, right?
In other words, go back to work, honey.
Exactly, because I was an artist, right? But long story short, I did a lot of research and started kind of, offering lunch and learns, and I love the industry, and I was making a difference in people's lives. And here I am 20 years later.
That's amazing. And I love that story so much. You found your passion. As you know, because we've spent some time together, I've been in real estate 36 years.
Wow.
Long time. No, 37 years. I've lost track. It's so long.
Wow.
Started in Connecticut. And when I came to California, my dad was living in the community where I currently live. And there was a guy here that was not doing good things when I moved out here in 98, which is 25 years ago. There was a guy that wasn't doing a good thing by these seniors who were taking advantage of them. And it kind of ticked me off. And then I said, well, I'm going to remove you. That sounds terrible, but it was true because I felt so protective. Yeah. Which at some level leads us into our topic, because as you know, and as I've shared with you, we have situations where people are truly clueless, and they have misperceptions. They think that when you do a reverse mortgage, the bank automatically owns your home when you die and the inheritors get nothing. None of which is true, but I don't want it to come from me, because yeah, you're saying that because whatever, Ginny. I'd rather have it come from somebody like you, because this is what you do. So talk a little bit about that. Share, please, the process, if you will. And how, what happens, like say for instance, I have a reverse mortgage and my girl, I don't plan on dying anytime soon, but let's pretend my daughter is my successor trustee, and she now, I'm gone. What happens?
Yeah. So what's interesting, Jenny, is I get this question a lot because I do a lot of training, and people think it's a gotcha moment. It's like,
Mm.
oh, you told us all the things that this product can offer, but what happens at the end, right?
Wow, I love the way you put that, Jeannie. I love
Hmm.
the way you put that, because that's a powerful statement, and I
Hmm.
love that you're saying it that way, because it's feeding right into, sorry for interrupting you, but it feeds right into my entire issue of dispelling myths.
Right, right, right. And the other thing that I hear from my clients is they'll say, what happens if I die?
Mm,
And I always have to say, we all will die,
am-
right? And so that's
amen.
going to happen.
Yeah,
So we have to plan for it. And that's one of
yeah.
the reasons clients don't get their estate plan done because they think they're not going to die. And so I do a lot of training and referring to
Mm.
estate planning attorneys so that they can prepare for this inevitable event and be able to think about it in a strategic and thoughtful way because it's going to happen.
Yeah,
Got
yeah.
to prepare for it,
Yeah, yeah.
right?
You know, what, oh, it's an interesting statement, because doing what I've done for so many years, I have a trust attorney. I sold my daughter and her husband a home, and I said, I'm going to give you 6 months, and then I expect you to have a trust, because without having something in place, and because my father did such a brilliant job of preparing, because I was a successor trustee, and I was the settler of the estate, if you will.
Hmm. Hmm.
So I have a drawer in my desk right here, right there, that one,
Okay, I see.
that has everything. And I am doing what my daughter did, which is every statement, every life insurance policy, every account I have, and everything. And that's what has to happen. Don't you agree?
Absolutely. And the number of people who die intestate is
Mm,
just really atrocious. And so
mhm.
I don't think you can have a conversation about what happens at the end without having the conversation about preparing for
Yes,
the end,
yes,
and
yes,
which then allows you to live
yes.
this life that God has given you, right? So,
Amen. And I
right,
love
it
that.
allows
I
you.
love what you're saying, because it's absolutely true. It's totally accurate. Totally
Right.
accurate.
So essentially, when people ask me that question, we get into what are your plans? Do you have an estate plan? Right. And then we talk about why that's important. And we know that very important people who have lots of money, like Aretha Franklin, died without a will.
Can you
Right.
imagine?
Right, right. And so we talk about that because it's been all over the news, and we talk about the money she had and the time and how much it cost for the estate to be settled. And this estate apparently is still not settled,
Yeah.
right? So that conversation always comes into play. And then I say, as you know, dead people can't own property.
Right.
There's always some laughs. It's true. It's true. And because people don't die enough, we don't get enough practice, as it were, on what
Mm,
happens when
mm,
people die,
mm.
right? We don't. And so we don't know, like, how it works, what happens when people die, how property is conveyed to somebody else. We just have often no sense of how all that works. So I have to go into that because I don't want to give a flat answer. Well, here's what happened. Because honestly, I want to serve my clients and my realtors and whoever's asking these questions in a way at a high level, which
Mhm.
means they deserve to have a complete answer so that they can really begin to get some things in place for their own lives, right?
Right. Right. And you know what you're saying is I had a client once years ago that they died intestate, and there were 5 sisters, and it was a disaster. And not only it was a disaster on multiple levels, because it was also a disaster in that the sisters were afraid to confront the attorney, and it went through probate. California probate is brutal. I think probate everywhere is
Yeah.
kind of brutal. And I ended up having to walk away from my client relationship with them because I could not help.
Mm.
And that sounds difficult, but it really wasn't difficult, because they had given all power to the attorney, were afraid to ask the attorney any questions.
Wow.
And it cost them a year on the market. And had they listened to me, it's not that I'm the be all and end all, but I actually know what I'm doing when it comes to selling homes. Had they listened to me, it would have saved them 9 months of time.
Yeah.
And it ultimately ended up selling for the exact number I told them it was going to sell for, but it sold a year later. So all of those additional expenses, all of that, which just breaks my heart. It breaks my heart. And people are afraid to talk about dying, and everybody dies. Nobody gets out of here alive.
Nobody gets out here alive. So, and I once had a case where there were 32 heirs.
Oh
Right?
my gosh,
32.
Genie.
Yes. 32. And think about it. I mean, we have a hard time, you know, agreeing for 3 people on where we're going to go to lunch, let alone 32 people all agreeing on what they're going to do with the property. So that's some of the craziness that you see when you don't plan,
And,
basically.
and one of the things that I've said so many times, and it happened in my own life, very frankly, which is that money changes everything. People change when money's involved. And
Yep.
and that happened to me personally when my I was well, that's not fair. I was experienced in what happens when somebody dies because of my parents, but my parents had a trust. So my mom passed away before my dad. I helped him through that process, and then I was so I was more versed in what was going to happen than others are. But money changes everything, and I'm not going to talk about that, but when money's involved, everything changes.
And I've
And
seen the best of families,
oh,
go through best of families, like, go through, right? So,
yeah.
yeah.
In fact, there's somebody I helped a bunch of years ago now, sold their home. It was the dad home, inherited dad home. And it was, I had to pull in my trust attorney who, I think for me, why he's my guy, and I recommend more than one always, but when he's involved, he is so firm but gentle in the way
Mm-hmm.
he
Mm-hmm.
explains things,
Mm-hmm.
that it makes it easier to understand and accept.
Right.
Don't you agree? It's
Oh,
vitally
of course.
important. But I also have said multiple times that every person who teaches SRES needs to speak to every student in the room, that you all need to have a list of providers,
Right.
such as
Right.
yeah. So speak to that if you would, please.
Yeah, I do have a list of estate planning attorneys, trust attorneys that I refer a lot to, honestly, because I ask every client, not some, every client about their estate plan. That's how important I think it is. And so I do a lot of referring. And often in this day and age where you can go online and get everything, I let people know that if you're not if you wouldn't do surgery on yourself, right? You wouldn't, diagnose yourself and then treat yourself if you don't have a law degree, and a law degree specifically in estate planning. Why would you trust some boilerplate thing, not knowing the law? Like, let's not skimp on the things that are really important, right? And I have that conversation. And I say the same thing to clients who say, I want to list and sell my home. Oh, so you've sold real estate before. Like, a realtor can save you a lot of time, a lot of money, a lot of heartache. Use a professional.
Yeah, yeah. So let's move into what happens.
Yes.
The person has passed away and they have a reverse. And I've spent some time, a tiny bit, with Christine Jensen of Fairway about
Yep.
the way things are recorded with a reverse, which I understand fully. And I think it's that piece that if anybody has that capability, that they just don't understand it. And somebody passes away, they have a reverse. Let's pretend they have a trust. What happens next?
So the point is, people need to understand when you do a reverse mortgage, it's a mortgage, right? We're not taking the house. We have a security interest recorded in the county deed records, just like any other mortgage.
Right.
And so the terms of this mortgage, the HECA mortgage, is that you don't have to make any payments as long as you're in the house. It's not due until you die, move, or sell, right? Or the note actually says until you turn 150 years old, right? Because you have to put a date. We don't know what the date is. This is not a 15-year mortgage or a 30-year mortgage. It's a mortgage when you no longer live in the house. So we make it until they turn 150 years old. And so when they die, the first thing that's going to happen is that we got to figure out who owns that property, right? Dead people don't own property. Who owns it? Right. And if it's in a trust, it makes it much easier because they've already determined who will inherit that home. The problem often comes when they die without a will or anything. So they're going through probate, but even a will has to be probated, right? And a will can be contested, as lots of people know. So it depends on how they have turned that house over. And then once we know both who owns the house and who's going to be the executor for that estate, who's going to be the settler of that estate. That's who that needs to call the lender and say, my mom died, I'm the executor, right? And then they will ask, the lender will ask for some documents. They'll ask for the death certificate, and they'll ask for, if the estate has been probated, they'll ask for those documents. If it's in a trust, they'll ask for those documents. And then they'll want to know, what are you going to do to pay them loan back? Are you selling it? Are you refinancing? And they order an appraisal, because if you did a reverse mortgage 10 years ago, the value's changed, probably gone up significantly, given what's gone on in this country with housing. And so we order an appraisal. And that way, the heirs then had the ability to compare the appraised value with the outstanding loan balance, right? We're trying to determine, is there equity there, right? So that you can't make good decisions without good information. So having the appraised value, current appraised value, not what Zillow says, not what somebody offered, the appraised value compared to what's owed on it. I've never seen heirs walk away from money on the table.
Of course not. No.
Just haven't seen it. So often what happens, my clients are concerned about their kids, right? They don't, I want Johnny and Susan to get the house. But the reality of it is, and you know this as a realtor, that most kids sell the house. I hear only 1 in 200 heirs ever keep a house. Because think about it. How do you divide a house amongst, I have 3 sons. How do you divide a house amongst 3 boys? You can't. You can divide money all day long, right? Almost always they put it on the market. They sell it. They get rid of all your stuff. All that stuff that you've been collecting.
All the stuff that you thought somebody really wanted to.
Exactly. They get rid of all of it. All of it's gone, right? They don't care about it.
I have stories, Jeannie, but we're not going to go there.
Well, I mean, we all have stories. When my mom died, she was a collector of salt and pepper shakers.
Oh, please. Oh.
That was a great thing for her. None of us, and it was 5 of us, none of us wanted we're like, we don't want it. We threw it away. Like, it was great for her, brought her a lot of joy, but we didn't want it. So, that's another story, but really kids don't keep houses.
No.
Okay?
And I could share with you, my mother collected precious moments. And after I got rid of her precious moments, I realized I used to collect trinket boxes. Well, I've stopped doing that because I know my daughter doesn't care about my trinket boxes.
Nope.
So I stopped that because she's going to be the one who's going to have to deal with it all. And I've become a purger. I'm very good at purging now.
Simplifying your life sounds like.
It sounds better than purging.
It does.
Well, I'm calling it purging anyway.
Less the dust, less to worry about, less to
Yeah,
insure, less to
exactly. So, okay, so most of the time, what you're saying is they choose to put the property on the market and sell it because I believe, and I'm pretty sure I'm right here, that if the inheritors choose to want to keep it, they can do that, but then they have to qualify to put a forward mortgage on the property and pay off the existing.
or a reverse mortgage, um, if they qualify, because often those kids that
Are
are
old.
inheriting the house are already old.
Yeah,
like
yeah.
like they're 50s, 60s when their parents die, 70s, right? Sometimes. So the kid often the age such that they want to keep the house, they could do a traditional mortgage and start paying and pay off the mortgage and start making a mortgage payment. They could do a reverse mortgage if they're old enough. They want to stay there. And I've had situations where case as well. Yes. But
So,
most of the time they sell it.
so most of the time they sell it. So what's the best advice that you would say to somebody that is that person who says, I want my kids to have the house? What, and
We have a
they're afraid. Well, the myth is this, the bank's going to take it over and I've given my house away.
Yeah, so we just have a conversation. I'm like, let's, for one, I like to have the whole family there if I can. I want to
Mhm.
talk to the kids. I don't want them to be surprised.
Mhm.
I want them to know what mom or dad are trying to do and for them to be involved. I think that's important. If the borrower's open to that. Sometimes they're not open to that.
Mhm.
But then we talk about that's not true. Let's think about how a traditional mortgage works. Or let's say they have a traditional mortgage. And I say, well, what will happen if you died today, God forbid? You have this traditional mortgage. What happens? And we walk through that. Well, they would inherit the house, but there's a mortgage there, and a mortgage is a contract.
Right.
What are they going to do with it? Well, they'll probably sell it and pay off the right, or they may refinance it in their own name. Okay, but they have to deal with it. And
Mhm.
sometimes people think that the reverse mortgage um, abdicates their kids' ability to have to deal with the home. It
Mm.
doesn't.
No.
You're still going to inherit it. You still have to deal with it,
Yeah, yeah.
whether it's a mortgage on it or not. You got to deal with it.
Right, right. Well, that was brilliantly said because I loved the way you said that. And it's one of the things I've loved all of my conversations with everyone I met through Fairway is there's always that little bit, that little trinket of something that uh, someone says that says, oh, and then just what you just did is like, well, what happens if there's a forward mortgage on the property? Do you still have to deal with it?
Still got to deal with it, right?
Yeah,
A mortgage is a contract, and
yeah,
it's a
yeah,
contract between the lender
yeah.
and the borrower. If the
Right,
borrower's dead, you inherit the
right,
title,
right,
but that mortgage has to be dealt with,
right, right,
right?
right, right.
So, and often we're in this industry, we think that people in their 60s, 70s, 80s understand this. But again, it's one of those things you don't do enough to get good at it. This is our
Right,
business. We
right.
do this every day. They
Yeah,
just don't know. So
right.
you just have to take the time. You don't want to belittle people. I never want to belittle people or make them feel stupid. I just want to take the time to
To educate.
explain, right?
Mhm,
Educate what really happens. And
mhm.
let's think through this so that you can then make better decisions, right?
Yeah, brilliantly said, my friend. And I'm grateful. I'm so grateful that you were able to give me this time because I knew you were the right person to talk about this particular subject. I love that you interjected the issue of everybody. I had a 103-year-old client who wasn't understanding why nobody wanted her stuff. And I remember walking into the house once where she was holding a doily about
Oh,
3 inches and rubbing the doily. And I said, oh my goodness, sweetheart, I would love to have that for myself. May I have that? And it's in my office back there.
oh, wow.
But that's the process. And I love what you just said is educating and taking the time to explain it well so that there are no questions. And I also love what you said about making sure that the family is there as long as the borrower agrees to that everybody gets to understand it because as we know, they're all going to talk to their best friend's ex-wife's first husband and get wrong information and create a problem. But the problem really belongs to the borrower when the borrower, and this is what I've had so many times, is that when I've explained it myself And by the way, probably most of these videos are going to be used in future classes I'm teaching, because when you explain it in a way and you have a student in the room, as I did last year, say, this is a game changer. I said, yeah, it is.
Yeah.
It's a game changer for that person who might be on limited income or doesn't want to live in the neighborhood they're in anymore, but own their home, and they have the opportunity to make a change in life. Genie, it's a joy, absolute joy to have this conversation with you. I hope that maybe if I come up with another bright idea, I'm able to get you back on a call with me, because I think I just, my whole goal here is, because I personally suck at I'm being a New Yorkie person, that people have misinformation and don't choose sometimes, not always, but sometimes, to get more educated. And that's why we're doing this. So Genie, you're the best. I appreciate you. Great to have a conversation with you. Thank you so very, very much for your time. And I look forward to the next time.
Thank you. Thank you for having me. Thank you, Ginni.
Well, I got to tell you, even I learned a little bit, but sharing conversation with someone who has the same passions about this particular subject as I do was quite special for me, because when you work in the senior market area, as you know, I'm a realtor and I sell a lot of homes for and with seniors and inheritors. You deal with a different dynamic, and this myth is a big one, because the misperceptions are enormous. So I hope this helps you. I hope it gives you the ability to help someone else in their process. And please make sure you subscribe, because there will be more content. I have a few more myths I have to dispel and some other stuff going on. So I look forward to seeing you next time. Make sure that you know that Genie's contact information will be at the end of the video, and I'll see you next time.